Welcome to another video. Today we'll be speaking about how you're supposed to manage a position. So when you're supposed to move your stop loss to break even, when are you supposed to move your stop loss below a swing high or swing low, and in general, how you're supposed to manage the positions, the different ways in which you can manage a position. Now, if you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform, and I'm a swing trader as well as running an educational company in which I first teach all of my students how my strategies works, and then I show them in real time market conditions how they're supposed to apply them. Without further ado, let's get straight in the video. Okay, so let's speak about the two main ways that I suggest all of you to manage your positions. So no matter what kind of strategy, swing trading strategy or day trading strategy you use, I suggest you to manage your position in one of these two ways. And to test your strategies, because it's very important to test the strategy and see which one of these two options works best for your strategy. So both back testing it and live testing it. So let's start from the first way in which I suggest all of you to manage your position. So the simple way, this is the one that we use because it is the one that it is more profitable, and I have tested it, both back tested it and live tested it for our strategies. That is basically to once you enter a position, as soon as the market gives you the possibility, you go risk-free on the trade, meaning that you move your stop loss from the area in which your original stop loss was to break even, meaning that you move your stop loss to 1 pip or 2 pips in profit just to cover the commission, and you then just let the trade run to your take profit or to run to a break even trade. So at that point, after you went risk-free on the trade, as soon as the market gives you the possibility, you let the trade do its job, either goes to take profit or takes you out break even on the trade. So that is the way I suggest, and it's the way that it works the best for our strategy. So the ICI strategy, the TLCTL strategy, and the WM strategy, this way works the best, and it's the way that gives you the highest returns. And I have both back tested this and live tested it. Now, the other way in which you can basically trade and basically manage your positions is to trail your stop loss. What do I mean? Let's say you take your entry from here. The market makes the first wave to the upside, and you can go risk-free on the trade. So basically you move your stop loss and you go risk-free. Then what the market does, it makes a retracement and it makes another impulse to the upside. At that point, instead of you leaving your stop loss here, you move your stop loss below the low, okay, below the swing low. Then the market makes another retracement, another impulse to the upside, and again you move above your stop loss. Basically you move your stop loss below this low, so locking in more profits. Then the market makes another pullback, another impulse, and again you trail your stop loss below this low, locking in more profits. And overall the market at some point is supposed to hit your take profit, or you can even not have a take profit and just keep basically trailing your stop loss below the lows. So there are basically these two main ways to manage your position. Now, if you use this strategy, you will have the possibility that the market will just go back and, for example, do something like this. And at that point, what happens is that you have been taken out for example, just a 1-to-1 risk to reward. And that is one of the reasons for which for my strategies, it is more profitable to just let the trade run to the overall target. And at that point, you basically don't care what will happen here. The market can just go crazy instead of this area, but overall, you already know that you are risk-free and you want to see the market hit your take profit. So there are different ways in which you can approach this these different ways to manage your position. Let's take a live example. For example, here, let's say that your strategy, you are just a trader that likes to buy from structure areas. So you clearly see that in all of this impulse to the upside, you have some structure around this area, and you clearly see it. So your strategy tells you that you're supposed to take long. Okay, let's just use this as an example. This is not a strategy that I suggest you to trade because it's based only on one time frame and it makes absolutely no sense. So let's see how the different ways in which you can manage your position. So at this point, once the market makes this move to the upside, in both cases, I suggest to go risk-free on the position. So move your stop loss above the entry price, 1 or 2 pips above, just to cover the commission. Now there are the two different choices. After you have gone risk-free, as we have just said, there are two different choices. You either just set your take profit and let the trade run risk-free to your take profit, or basically look at what the market, keep following what the market does and trail your stop loss below the lows. So obviously for the first case, it's pretty simple. You just have to leave your take profit there. There is nothing to be done. So let's see how you're supposed to basically trail your stop loss. So you clearly see that the market has created the first retracement. The market went all the way up here, made a minor retracement, again made a minor retracement. So you have already trailed your stop loss once and twice. Okay, so now your stop loss is here. So let's see what the market is doing. So you clearly see that basically the market has made another push to the upside, another retracement, and another push to the upside. So again, you trail your stop loss below this low. And again, the market has made another impulse, another retracement, and another impulse. So again, you trail your stop loss. And now the target has hit. Or you cannot have basically fixed targets and just keep trailing your stop loss. And if now the market will make another move, you move again your stop loss, and then you move again your stop loss. So basically these are the two main ways in which you can manage a position. And basically I suggest all of you to go and backtest and live test which one is the one that provides you with the biggest profits regarding the strategy that you are trading, because it will depend on what strategy you're trading. If you trade one type of strategy, for example, the first method will be better, or for another strategy, the second method will be better, and it will be the one that provides the biggest revenues. So these are the two main ways. If you enjoyed the video, make sure you smash that like button. It really does support the creation of more free education for all of you, as well as letting me know in the comments if you enjoyed the video, and if you didn't, what do you think I can do to provide more value for you here on YouTube for free. So if you didn't check out the mentorship program yet, make sure you go check it out. This is a very complete program, and I will see you in the next video.